Company reports strong profit growth, revenue is up, margin looks healthy, headlines sound positive, then the stock falls the next day. Many retail investors see this and think the market is irrational. But most of the time, the market is not reacting to the headline you saw. It is reacting to the expectation you miss. This is one of the most important concepts in investing because if you don't understand it, you will keep buying after good news, keep getting trapped, and keep wondering why your portfolio is bleeding. By the end of this video, you will understand why good result can still lead to stock crashes, how expectations really drives prices, and how smart investor read earnings season very differently. Let's begin with the biggest mistake. Most people compare results with the last year. The market compare result with what it already expected. The difference changes everything. Suppose a company reports 20% profit growth. Sounds excellent. But what if the market has already priced in 35% growth? Then 20% is not victory, it is a disappointment relative to its expectation. That gap between expectation and reality is where stock moves are born. Think it like an exam. If a student who usually scores 95 gets 85, the people feel disappointed. If a student who usually scores 60 gets 85, people celebrate. Same number, different expectation. Market works exactly like that. Why were expectation high in the first place? Usually because stocks were already expensive. If a company trades at a premium PE, high forward PE, or rich valuation multiples, investors are not paying for average performance. They are paying for strong future growth, better margins, market share gain, and consistent execution. That means the company must keep surprising positively. Good may not be enough, only great may be enough. This is why premium stock often falls after a decent quarter. Now let's discuss another huge factor, guidance. Sometimes current results are stronger, but management says next quarter may slow due to weak demand, higher raw material cost, lower export pricing pressure, competition, regulation, or seasonal weakness. The market reacts immediately because investors do not buy last quarter, they buy future earnings. One cautious sentence from management can matter more than an entire quarter of reported profit. Now another important layer, quality of growth. Revenue can rise for many reasons. Was growth driven by higher volumes? Was it driven only by price hikes? Was it helped by one time gain? Did margins improve sustainably or only temporarily? This question matters. A business growing through real demand, expansion, market share gain, and operating strength gets more respect than a business growing through temporary pricing or accounting effect. Sometimes a stock already ran up before results. Maybe it rallied 20% in last month because investor expected a blockbuster quarter. Then blockbuster result come, but there is no fresh surprise left. So traders book profit, retail investor get confused and say results were amazing. Why down? Because moves happen earlier. This is often called buy the rumor and sell the news. What should smart investor do during the earning season? Never read headline in isolation. Profit up 25% is incomplete information. Ask what was expected. Check valuation before result. A stock trading at premium valuation needs stronger delivery than a stock trading at modest valuation. Read management commentary very carefully. Future demand, margins, capacity, order book, competitive intensity, and guidance matters hugely. Judge quality over growth. Was it volume led, margin led, one of sustainable? Think beyond the quarter. A great business can have one weak quarter. A weak business can have a strong quarter. Do not confuse quarterly noise with long term quality. Here is the biggest takeaway. Good results do not guarantee stock up. Bad results do not guarantee stock down. What matters is the gap between expectation and reality. Once you understand that, earning season start making sense. So the next time a stock falls after strong numbers, don't instantly say market is stupid. Ask a better question. What expectation was built into the price that I failed to see? That one question can upgrade your investing mindset immediately. Thank you very much. See you in the next video. Make sure you subscribe the channel and like the video. Thank you.